All right, good morning, everybody. TG Watkins here. Let's see, it is July 26th. The days keep on ticking by for the summer, don't they? Well, it's another lovely day out there for us up here in the Pacific Northwest. A little rainy yesterday, but today, man, it's beautiful out there. So I know we got some fellow Northwesterners up there. Hopefully, you guys are doing well. Okay, gotta get my microphone back up here. Let's see. So today is FOMC, and we'll have to see what kind of action we get there. It is pretty much assumed and baked into the cake that the Fed is going to raise rates 25 basis points. So we'll see what they do with that. And of course, I think we know that it's always about what Jerome Powell says during his Q&A press conference. So we shall sit with our popcorn ready and popped, and make sure it's nice and buttered up, and put some salt on that because there could always be a show in store. That being said, the market has actually been on a really, really good tear, very strong, perhaps a little bit too strong. So we'll kind of show you a couple things about that, and then we'll kind of dive into this. So just remember, if you guys are interested, we can come over to Profit Pilot over for Twitter, which I don't know. Are we going to keep calling it Twitter? It's going to be an interesting saga to see where this thing goes. We might have to change our lexicon. If it's no longer Twitter, do we keep tweeting? Like, do we send out a tweet? What do we do? So yeah, I'm sure that there's lots of conversation out there about some of these changes. But anyway, if you want to check that out, we also just posted. Well, maybe I didn't post yet. We'll have to see if that thing was on a timer. Yeah, I posted about Weight Watchers. So Weight Watchers had a really nice pop today. Let's go talk about that right here. And you guys can see, oh yeah, nice move. So we just took a little bit off, took some profits. Always good to take a little bit off when you get something like this, and then you can just let it go. So let's take a look at the higher time frames. You can see very similar to what we've been seeing with a lot of stocks out there. This has been the narrative that I've been talking to the Moxie subscribers and fellow traders, that I think that the market has really changed. I mean, clearly we're seeing what the S&P and the Nasdaq are doing, but we're also seeing the IWM, and we're seeing the Dow. The Dow broke out over the last 2 weeks. But you look around, you look at 1,000 different stocks, and you're starting to see changes. Now, not everything is on board. Of course, there are going to be leaders and laggards, but you look at something like this, and what are we seeing? What initially started was that we had the weekly Moxie price trigger fire, and we had a giant squeeze on the weekly chart. So that's looking good. Now, I don't always talk about the DPO. My dad likes it, and so this is kind of why I put it on my charts. And I really only have it on the monthly to kind of keep my charts balanced. But what's interesting to note is we're seeing a lot of stocks where the DPO is starting to actually go positive, starting to cross over zero after a very long time of being negative. So just across the board, we are actually seeing a lot of things that are improving on these higher time frames, which to me tells me that we are in a pretty good market with a lot of things starting to participate. And it's been this way almost to the dot, pretty much the end of May. I remember about 2 years ago, it was February 15th, where basically the market topped out. For anybody who was trading with me at that time in the Moxie group, you guys know it. Almost all of our stops got hit within 2, maybe 3 days, but pretty much 2 days. All of it happened just suddenly, right around February 15th, and boy, it was not the same for 2 years after that. It was pretty crazy. And then on the upside, we're starting to see some traction. So I put out a webinar March 1st that started to say, hey, I think we're starting to see some stuff. And then I put out another one June 13th. And the trigger was at the end of May. And I think it was the debt ceiling crisis that seemed to be the trigger for a lot of things. But yeah, if we look here on the weekly chart of Weight Watchers, we saw a lot of volume come into this thing. And you can see here it had it for its first big move. And this is what I keep telling all the subscribers and traders in the Moxie room is like, hey, look, that's the shot across the bow. That's the heads up. Like, look, I got something going on, big moves. Now, you don't want to go chase that. So you have to go wait and find the next best entry. And that's what we did. And here you go. There we now have new highs. Now, I think Weight Watchers clearly, unless something goes catastrophically wrong, Weight Watchers is in a new trend, a new long-term trend. I mean, this thing is just starting on the monthly time frame. And if we think about it, Think about the possibility of what a long-term trend means. If this thing was even in a downtrend for this long, I mean, what is that? Almost 2 years? Think about what an uptrend could be. Weight Watchers could be in an uptrend for a year or 2 years. Like, who knows? But when we see something turning on a monthly and a weekly time frame just like this, it's so fresh with big volume coming in. This is going to be a longer term thing that we can actually play in and out multiple times. So Weight Watchers is going to be one of those things that's really just on our list that we are going to be, scalping for opportunities here and there. So back, oops, and what you can see is when it had its first move. Now, granted, maybe we didn't know it, maybe it was not on the radar and all that kind of stuff, but now it is. Let's just say that somewhere around here, you were already in Weight Watchers for whatever reason. You saw some signals like that Moxie price trigger right there. And you saw that there was a trampoline move on the daily chart, and you said, okay, let's go for this. And then, fortune had it, you had some good news, and it spiked on you. Now, it would be prudent to start taking some off up around here. Sorry, the cat now has come in and wants to get underneath the blinds. So, you know what they say, curiosity killed the cat, right? Well, hopefully he doesn't make too much noise. I'm sure some of you guys have cats out there. But anyway, it would be prudent to take some off here, even though, yes, it went higher. It would still be good to cash in a little bit because you know what? Otherwise, this was a very long time that you just have to sit on that, letting it decline, 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 and basically do a 50% pullback before it finally went up again. Now, we as swing traders have a little bit more precision than that, and we can do better than that. And so what we can do is we can wait for it to at least start to come down somewhere in that area. And that's what we started to do. So we started kind of trying to build a position there. It's still just a hair too early. And then it's finally turned around and spiked on us. And then we started to pile back into it. So that was a good trade. Pretty happy about that. Take a little bit off and then we'll see where it goes. You never know what earnings are going to do for as good as the company is and something that is clearly strong and happening. They could always just knock it down on earnings just because that's what earnings is. So, there's really anything goes when it comes to earnings. Yeah, so that's pretty good stuff. We're seeing a lot of that across the board on monthly and weekly timeframes for a lot of other different stocks. So it's just fantastic to see that this market is really kind of coming back, and especially when you see the Dow. I mean, look at that. Even on the look at this monthly, weekly time frame. How clear, how crystal clear is this right there? That we are starting to clearly see a breakout. And you can even see it look right on time. I mean, how's that for timing? You have the Moxie price trigger on the weekly chart starting to fire. So again, if you guys are out there and you haven't gotten the Moxie indicator, you can pick it up on Thinkorswim. We have it on TradingView. We have it on stock charts. So, we've got kind of our major bases covered as far as the ability to get the indicator. Let's see, FOMO. How you doing over there, man? Good to see you. Let's see, Oh, yeah, I see. Yeah, that was not a ticker. That was for my first reference. Yeah, FOMO. I will say that's a little bit close to some other terminology that we've invented for our lexicon as far as certain text-oriented communication, but I won't go there. Yeah. Let's see. Also, John, if we were, yeah, let's look at AFRM. Now, John, mind you, like what's the environment right now? Well, the environment is that the market has had a really, really good run. It is pretty high. It could be argued that it's overbought, and we know that breadth is also pretty much on the overbought side. So we're going to have to see what's going to happen as far as a rotation. Either certain things need to cycle down, or there needs to be a rotation underneath the surface, which we've seen in some names, which you can kind of demonstrate. But it's just like right now. Yes, there are some names that are clearly moving. Look at Weight Watchers. But there are other names that are going to be idling and taking their time because, well, the market's already pretty high. It could use a pullback. We have FOMC today. The market's kind of doing whatever it wants to do, but it is doing it in what I think is a strong bullish leaning. You just have to kind of ride the ebbs and flows. So when it comes to AFRM and we look at these higher time frames, I like what's happening here. I think something's building. It's really just kind of a matter of time and what kind of wiggles is it going to do until it really gets going. So I don't see anything negative. We just have to say, okay, when does this thing want to finally move? And we can kind of see here, look at this trend line. Let me just put it right, something like that. Look at that. You see right there, let me get that nice and zeroed out. Look at that. You can just use your eyes and you can see that, well, there was a level there. There's clearly something there. There was something there. And what is it dealing with right now? It's trying to get past all of that overhead resistance. Now, I think it will eventually, but the question is, what is it going to do in between? That's always the question. We don't know. There's always a possibility it can come all the way back down before going up because maybe it needs to do a double bottom. We saw Squarespace do that. I think ONON did something like that. That's always a possibility. IOVA, it looks like it could be doing that. So we need to be okay with that. We either say we're going to get out long before that happens, or if you think that's going to be a secure enough thing, well, then maybe you set your stop even lower than that. So that's kind of the happy medium of what you need to figure out of to do. Or if this thing looks pretty great and it's already done its dip, then what it's going to do is probably just flag around in here until it finds support and then it moves up. One way to look at that is maybe like BE. So far, today, this morning, BE was taking a little bit of a dip, but you could look on the hourly chart, that was basically a double bottom. And on the daily chart for now, it's holding the daily 21. And so that is kind of another argument that I would use for a firm, AFRM, is well, it had that pop yesterday. It was basically a trick. That pop didn't work. It came back down. So now we have to ask ourselves, like, oh, was that a failure? We don't have that either because price is still staying above the daily 21, just like Bloom Energy is. And that could work. We also saw Weight Watchers, for example. What did Weight Watchers do? Notice how it stayed above its 21. And if you look here on the hourly chart, kind of a double bottom right through there before it finally took off. So if we go back to AFRM, we just don't have that answer yet. You know, we're going to have to let it do more in order for us to really figure out if this is going to be a problem or if it's just merely going sideways because really it's just kind of hanging out. So we just don't have enough information. It could turn out to be a loser, but we don't know yet. So we just kind of have to hang out and see what it does. Nike, I've been kind of watching this one for a while too. If we look at the higher time frames, I think it's trying to put in its low. What I find very interesting is that we have price below the monthly 10, but look what the monthly 10 is doing. It's actually angled up. Very, very interesting. And if we look here, this could be an inverse head and shoulders. And I do think that this is starting to try and put in its low. And in fact, John, if you look at FXI, which the Chinese ETF, in a way, it looks very similar. In a way, it had it move up, and then it's basically been pulling back for the last several weeks, if not a few months. But then it found support, and now it starts to move up. And I think Nike is trying to do the same thing. So, yes, it's taken a very long time to get itself figured out, but I have a feeling that this is the low, and it's really just trying to find its footing, build up some time, and all that kind of stuff. There has been an increase in volume right here. Price hasn't gone lower. So until this thing really breaks lower, I think it's really going sideways to consolidate, build strength, and eventually move back up. But it's got some things in the way. It's got to move past the daily 50 right there. And then it's got to, start getting traction on the hourly chart for these up angled moving averages. So yeah, stuff like that. Looks like we got a fair amount of people over here in YouTube and Facebook land. So if you guys want to ask any questions, let me know what you guys are seeing out there. I know some of this might be a little bit moot considering that we have the FOMC today, and everything could change later today and into tomorrow. But we do what we can as far as the evidence that we have, and knowing that there's always news. There's always news coming out. Let's see some of the other ones that we've been looking at. We've been talking about the dollar. So if we can go over to the XY, and the Moxie group and I discussed this yesterday, and I think it's going to be working out pretty well. Let me get it. Let me get over here. The dollar right here. We kind of see this. What we got again with that line. Kind of just use your eyeballs, and you can see that trend line. Notice here how there was support. And so this is kind of like what I was talking about with Nike. Let me come over here to the hourly and daily chart. So notice with Nike pulled back, and Nike has made its double bottom right there, right? Well, remember, the market is a living, breathing entity, and support can hold for a period of time, and then it may not. It might change. And so you can look here and you say, hey, the dollar or some stock or Nike came down, did a double bottom, and it worked. for a period of time. Now, that doesn't mean that it has to work for in perpetuity into the future. It just means that that worked right there, but things can change, and that what's what we need to be aware of and adapt. And it looks like the dollar came back down, reassessed that previous double bottom, and said, "Nope, I don't think that's going to work. I don't think that's going to hold." And now it's making new lows. It rebounded because it got oversold, but now look, instead of this area that was support, this might actually start turning into resistance. And that's another thing to kind of look out for and watch. We have seen, I'll get to that in a second, but we have seen these support resistance trend lines really be a thing lately in the market. So I'm very, very interested to see if this is going to be a thing with the dollar and if it's going to continue being resistance and move down. The biggest thing that I think is going to be the sign for the dollar continuing to go down is look at this monthly 10 SMA. And look at price just getting stuck right under it and then starting to make new lows. So that looks pretty obvious to me, and I think that is going to be the key to having the dollar move down, which generally is going to be good for stocks and equities and precious metals. So that's why we have a few trades on our trade sheet that are taking advantage of what I believe is going to be a downtrending dollar. Because look, you can see uptrending, downtrending, So yeah, I think that's going to be, doing that. Okay, so trend lines. Let me show you the semis were absolutely amazing when it came to this. If you guys want to, okay, now I know there are a lot of lines here, so maybe I'll clean this up there. Oh, that's perfect. That was a perfect one. That was a good guess on my part. So notice here, you can see that we've had this downtrending trend line, for what, a year and a half when that was. But then what you'll see is notice how it broke out from that trend line. And then notice how it came back and perfectly tested that trend line and it never looked back. So that's why I'm saying that the dollar, which has a horizontal trend line and had price over that trend line, and then it broke out below that trend line, and now it's back at the underside of that trend line, is basically the same theory and same principle here as the semis with the trend lines. So do what you will with that information and what you think that if a declining dollar is going to be happening, then what that might actually do for you and for your trades in certain areas to find stuff. John, about the EV space. Yes. I've been seeing China do pretty well, and I don't know where this is coming from, but yeah, NEO and XPEV, big movers. And actually, I was expecting a little bit more of a pullback on NEO, but instead, what it did is it basically flagged over the daily 200. You could kind of call it the daily 21, but it was definitely the daily 200, and it just continues to pop. So that has been a thing. I was I was a little surprised at how well this has been doing, but just like I showed you guys earlier with Weight Watchers and how I think that there's a sea change, look at what's going on here. Look at Neo. Notice how things are different. Notice how we're really starting to get some traction here on the weekly time frame. And what do we see here on the monthly time frame? What do we see on the monthly time frame that we have not seen for 2 years? I mean, what is this? And this, if if you were ever to point at something, just look at this. Look at the change. Look at the change. And look how stark that is. Notice how in the beginning we got that, and how in the end we got that. And what do we have now? We're getting priced back over the monthly 10. So if you're feeling a little FOMO, so FOMO Baggins, if you're feeling FOMO about the say Neo trade, don't worry. I think that there's a lot of opportunity to still get in and to still go for these things. It's just beginning. Just the same way that when price got underneath the 10 and over the 10, and it was just beginning. I think we're dealing with the same thing. So guys, fingers crossed. I think we've got some really good stuff ahead of us, and we'll just have to see how long that goes for. And XPEV as also, look at that. I mean, look how fantastic that looks. And what is it doing? It's just now starting to be over the monthly 10. So yeah, I think we have some pretty good stuff. John, what other things are you looking at as far as the EV space goes? Obviously Tesla's doing well. You can see that a little overbought. So let it kind of settle back down. We'll have to see where it wants to settle in and keep going. Yeah, Rivian, RIVN, same thing. It's been a laggard, but it had a big move. I was able to notify the Moxie subscribers about this. I was going on a boat trip with my wife and her parents So I was out on the high seas of the northern Puget Sound. But yeah, look at that. There's the Moxie price trigger right on time. And you can see again, we have price now over the monthly 10. So I think it's a little overbought right now. This would be pretty challenging to want to get in. John, I think you've been around long enough. I think you pick up on what I was saying earlier about the Weight Watchers trade and how that was the shot across the bow. I think Rivian is basically doing the same thing. I think this is a kind of like the shot across the bow about wanting to go bullish and wanting to work. But I'd be very cautious about trying to initiate a long trade right there. It's a little overwrought, a little extended, not quite in the ripest place. The risk to reward is not really that great. So I would really wait for some sort of opportunity in order to then really get into Rivian. So just hold off a little bit on that one. So yeah, that's kind of what I'm thinking. But yeah, some of the rest of the EV space seems to be perking up. I mean, gosh, even what is it? WKHS Workhorse. Even Workhorse. Look at that volume coming in. Notice the volume. Now, I can't say that this is necessarily going to be a great trade. Maybe it is. Maybe it's going to pop like Rivian. We do have a Moxie price trigger. But what I'm trying to say is a lot of these EV names are starting to pick up again. So they had their heyday back in 2020. Then everything got shot. And it's been a long time that these names have been down and out. And it sure seems to me like things are starting to kind of pick up again, which is fantastic. It's been a long 2 years. All right, Stitch Fix. Yeah, Stitch Fix, kind of the same deal. Um, yeah, look, it's not done too much yet, but I do think it's starting. So this is kind of the thing that I keep seeing pretty consistently is notice, look, I gotta really zoom in on this. So it gets down to $4.30. I forget what the ultimate price was, but notice there's your double bottom. There's your Moxie price trigger. Price could not get past the weekly 50 yet, but it sure looks like it's trying to now. And in fact, Mark, I think you've got an eye for this. Do you see the elf shoe? There are two of them, but we'll talk about the closest one. Do you guys see that? I'm sure many people in the Moxie room see that right there. There's your elf shoe. And what are we getting? We're getting price. Looks like it's wanting to cross over the weekly 50. You've got the 8 just about to cross over the 21. Then we've got the Moxie price trigger. It's looking pretty good. And on the daily chart, yeah, not looking too bad. Now the question is, what's it going to do? So kind of like we were talking about AFRM, look at Stitch Fix. Stitch Fix. It's kind of just hanging out there. Now it might still need to take a dip. We don't know what's going to happen, but ultimately somewhere around here on the higher time frames, it does look like it wants to go higher. We just don't know if it's going to go higher right now or later. But yeah, overall, can't say too much that's bad about it. All right, DB, let's see, plug. And let's start with that higher time frame. And same thing. These things have just been demolished for quite some time. You can see I've been watching it for a while. We did take a trade. I think we took a trade right here. It still wasn't quite ready, but it is looking better. I think this might actually be the time. This might be the moment. So just keep watching. That monthly, weekly time frame is still a little bit underwater, but this could be the beginning of that. And if we look here on the daily and hourly, you can see that it's making a little bit of progress. Let me show you a couple things, most specifically on the daily. So for me and how I trade and how I look at stuff, I look for confirmation. I want to see things actually start working. So just because it had a pop or it had a pop or had a pop, notice how each of those pops eventually rolled back over and failed and didn't work and made new lows. You'll notice here, see how price went lower and lower and lower and it just couldn't hold those moving averages. Well, that means right now with plug, we're kind of at that make or break time. It's had another move, just like it's had 4 or 5 times earlier. And notice it's running again right into the daily 200, very similar to what it's done before. Now, if this is going to work, we need to see it continue. We need to see it actually hold and respect moving averages. So we need to make sure that if it comes down, it doesn't keep going down and just fail. If it does go down, it needs to hold and then continue up. And that will be the key. Okay, that it's the confirmation of support and a continuation that is going to be key to showing that this thing actually wants to do something to the upside. Maybe go sideways and then up. That would also be good. But basically what we need to see is it not fail. We need to make sure that it doesn't just slice right back down and just keep going down. Dips are okay. Testing of moving averages are okay, but not failures. So that's what we need to keep watching. Sammy, yeah, as far as the Chinese ETFs, and in fact, John, you're asking the same question. So let's talk about China. John, you're asking about yen. Well, basically, I'm going to look at FXI. And if you like the way FXI looks, then you buy yen for the leverage. And yes, I've been talking about this for quite some time. I really do like what's happening here with FXI. It has taken several weeks, a few months to kind of hammer out a bottom in through here. But I think that's what's happening. I think it's hammering out a bottom. I think it was what Nike, I said, was kind of doing the same thing. You can see we've got a squeeze. The Moxie price trigger, Moxie indicator is up. You even see that the monthly 10 is angled up. Big picture, these things are looking good. And look at this. What do we have? What do we have that is now fresh? A fresh new signal on the daily chart. Yep, right there. Moxie price trigger. Look at the last time we got one. So the Moxie price trigger, the Moxie indicator does a really, really good job about timing. So, timing wise. John, yeah, is it a good time to get in? At this point, right this moment, if you got in, you might need to factor in that there could be a pullback. Just simply because it's up there, it's a little extended. But if we're talking several weeks out, yes, I still think that this is a pretty good place to get in. I think it's looking okay, and I think it's basing to go higher. So, if you're getting a little itchy and you want to get in, fine, put a position on. If it pulls back, okay, just be willing to add a little bit more or ride out that dip. So hopefully that kind of answers both your questions. Sometimes you need to, have two things in your head at the same time. And then Sammy, as far as Baidu, what's not to like about it? Look at this monthly and weekly time frame. Look what it just did right there, right there, and right there. That was a trampoline move. So price below the 50, the Moxie indicator above 0. That's a trampoline move, and there was a tight squeeze on that. And we look at this weekly chart. What's it doing? It's really just kind of flagging right under previous high, very similar to AFRM. And I think Stitch Fix. Stitch Fix looked kind of similar. So that's kind of the thing is I've been talking about just getting your fishing pole out. Just get your fishing pole out and start kind of putting some lures out there, putting some bait out there. And then you just got to let it do its thing. And maybe the market will pop up and really take off like Weight Watchers did for us. So just kind of put your food out there, your casting line. But yeah, I think it's looking okay. I don't see anything wrong with it. It's still choppy. It's still noisy. It's still flagging. And it's still trying to get past its previous high. But I think it's just a matter of time until it does. Again, we go back to Weight Watchers and you just kind of look at this. Look how long it just kind of did this until it finally popped, and then it did a little bit more, and then it popped, it did a little bit pop, and something like that. So I feel like we're actually in a pretty normal market. As much as I can say something like that, it's feeling pretty normal again. And normal means that things don't just go straight up. They go up, they rest, they go up, they rest, they go up, they rest. Even look at Goodyear Tire. This is a good example. Great example. Look at that. Look at this. Big move up, rest. And a rest doesn't always mean just completely sideways. In fact, if I have this, oh, I guess I didn't. Maybe I took that off. Okay, let me do this and let's go to the Fibonacci because look at this thing. This move from here to here. Let me see. I think I had a little bit better, right about there to there. And look what it did. That rest was basically a 50% retracement. That's pretty normal. That's really healthy. That's pretty standard. That's normal. And as I said, I feel like this market is kind of right back into normalcy. It's kind of nice to see. It's kind of nice to see for a change. Anyway, guys, that is my time. I'm going to be getting going. Remember, come over here. We'll put a few things up on Profit Pilot for the Twitter, for the X. But otherwise, come over to simplertrading.com/Moxie. We're always offering a $7 30-day trial. So come on in. And if you guys like the way that I'm showing you about the Moxie indicator, come pick it up. We've got it for purchase with classes and all the documentation, rules. It's all written out. And we have it for you over at Thinkorswim, TradingView, and Stock Charts. So thanks again, guys. And Moxie Group, we'll see you in about an hour and a half or maybe 30 minutes at in the options room and Moxie. So thanks again, guys. We'll see you soon.